$73 is a long ways away. Is there a particular catalyst at this point that you see finally coming home to roost? Because the argument had been, in the past, and I'm going way back maybe, accounting issues, the vehicle tax credits are going to expire, all these different things that have sort of come to pass, and the stock hasn't hit, that very low price target.
Yeah, Melissa, thanks for having me. Good to see you. Long time no see. So Tesla is effectively valued as a high-growth company. And the problem is they're no longer growing.
Joining us now is the Tesla bull, Garrett Nelson with CFRA. He's got a strong buy rating, a $400 price target on this stock. GLJ Research's Gordon Johnson is way more bearish on the stock. He's got a sell rating with a $73 price target, the lowest on the street. It's interesting, guys, because it's rare that you have a bull-bear debate and you've got people so far away from the actual price of the stock. You're really on opposite ends of the spectrum. Garrett, I'm going to start off with you in terms of that very bullish price target that you have. Is that a 12-month price target, and what are the catalysts there, especially if we see a recession, which many more people are calling for? Is $400 realistic?
Yeah, thanks for having me. Let's not forget that just 3 weeks ago, the stock was above $300. So while the stock has come in, sold off sharply over the last few weeks, that we think $400 is still achievable over the next 12 months. Simply put, we view Tesla as one of the market's best earnings growth stories over the intermediate term. If you look, simply put, we view Tesla as one of the market's best earnings growth stories over the intermediate term. Tesla earned adjusted earnings of $2.26 last year. We see their earnings growing to about $7 by 2024. So, at a time when inflation is really weighing on earnings growth, broadly across the entire market, and consumers are pulling back on spending, there's really no other company out there that has this type of earnings growth trajectory. Even if you assume the analysts are wrong and you haircut those estimates by, say 20 to 30%, it's very impressive earnings growth. And it's being driven by increasing production and sales at the two new factories that they just started up in Texas and in Berlin.
Gordon, you've been a long time bear on the stock. $73 is a long ways away. Is there a particular catalyst at this point that you see finally coming home to roost? Because the argument had been, in the past, and I'm going way back maybe, accounting issues, the vehicle tax credits are going to expire, all these different things that have sort of come to pass, and the stock hasn't hit, that very low price target.
Yeah, Melissa, thanks for having me. Good to see you. Long time no see. So Tesla is effectively valued as a high-growth company. And the problem is they're no longer growing. The issue is very simple. Tesla in Q3, their sales were 343, but if you look at Q3 and Q2 versus Q4 and Q1, their sales were actually down, so they're no longer growing. Why is that a problem? The answer is simple. Tesla is valued at more than the next 10 largest automakers combined. They're valued at more than the next 10 largest automakers combined, despite selling just 2% of the cars those automakers sell. And when you look at Tesla's lead times, you can now get a Tesla car effectively in a week and for all of their variants across China, which means their backlog is gone. They're no longer growing there. Their sales in Q3 in Europe were actually down versus Q1, and there's effectively no more backlog in Europe. You can get a car immediately there. And in the US, the lead times for the Model 3 are roughly a week, and the Model Y are roughly 3 weeks. So this is a company that's no longer growing, and you're looking at sales growth that is now declining. And I think the issue is, unless Tesla cuts prices significantly, we think Q4 growth is going to be down versus Q3. So you're looking at a company that's either going to see no growth or margin debilitating price cuts to move units. And I don't think you want to pay 100 times earnings for that company when the auto industry trades at 5 times. And when people say Tesla's more than an auto company, they're not. 95% of revenues from selling cars, the other 5% from an energy division. But if you want to give them that, you have problems. Their energy division has single-digit gross margins, which means it perpetually loses money on the operating line. So I'd like to know how Garrett would value a company that loses money in their other division outside of cars.
OPEC, the Organization of Petroleum Exporting Countries, has announced it will cut back production by 2 million barrels a day, a decision that could be devastating for gas prices here at home.
Let's take a step back and look at why this is happening. It's the largest cut in oil production since the beginning of the pandemic. It could very well force crude oil prices back above $100 a barrel, which would also push gas prices higher again. And it can also help Russia pay for its war in Ukraine. That's because this decision could actually undermine a plan by the group of 7 wealthy nations to cap the price of Russian oil on the global market.
Prices at the pump after falling for 3 months in a row. Gas prices keep going up, climbing for the second week in a row to $3.80 a gallon nationwide. That's the national average, according to AAA. We want to bring in Patrick Dahan, Gas Buddy, head of petroleum analysis. Patrick, you're the perfect person to talk to about this. You're tracking every move in gas prices. So we've seen this jump over the past 2 weeks. Where, though, in the country are we feeling the most pain?
Yeah, it's very much a disproportionate increase. The epicenter of the biggest increase is really the West Coast. California prices now are retesting their 2022 highs. In some instances, stations are up $1 a gallon just in the last few weeks, not only in the West Coast, but areas of the Great Lakes as well, where prices are up 50 cents a gallon in the last few weeks. So really a handful of states, Oregon, Washington, California, Nevada, and Arizona, seeing the biggest increases. And that's so strong, it's pulling up the national average for the first time or the second straight week in as many as the last 16. So certainly unusual to see such a wide disparity in price behaviors across the country.
It's a huge blow to the Biden administration. This is really political jeopardy for them, as they are now just 5 weeks out from the midterm elections. And remember, just 3 months ago, President Biden visited Saudi Arabia, trying to repair relations there amidst the highest inflation in 40 years. So this decision really makes very clear that OPEC is intent on keeping prices higher after enduring really several years of low oil prices.
And what's their motivation for doing that?
Well, they want to keep oil prices higher.
This morning, new concerns about gas prices spiking once again. OPEC Plus, a group of oil-producing nations led by Russia and Saudi Arabia, is cutting production by 2 million barrels per day to boost prices. That small reduction could lead to big increases in energy costs, including for gas and home heating.
It likely means an impact at the pump of anywhere from 10 to 30 cents a gallon.
Welcome back. Tesla founder Elon Musk tweeted out last night that the company has started production of its long-awaited all-electric semi-truck and will make its first deliveries to PepsiCo in December. For more on this story, we bring in Yahoo Finance's Praz Subramanian, Yahoo Finance's senior auto correspondent, to break down this latest news. And we didn't know this was coming this early. We saw the truck, we saw it break slightly in the demonstration, but this big honking semi going to be rolled out by the end of the year. Is this just another one of those dates that we expect to be postponed, or is this for real?
Yeah, welcome news for people that are looking forward to the semi-truck. Is it an Elon distraction here? I don't know, but because it kind of came out of nowhere. He had mentioned that the truck would go into production soon. We first saw it in 2017. So it's been over almost 5 years, and now he says not only starting production, going to be delivered to Pepsi on the 1st of December. I reached out to Pepsi to get comment. Haven't heard back from them yet, but it's still a big deal for Tesla to get this semi out there. It's a big space, right? There's a lot of competition there between like Daimler and Volvo and even Nikola, right? So it's good that this truck's out there now, and there's going to be some big tax incentives too. I think that's part of the deal why Elon wanted to push that out so fast.
Well, it's interesting, too, because Elon Musk has to raise potentially hundreds of millions of dollars just because of the higher interest rate environment. We know that he has to finance that Twitter purchase. Some people are estimating billions of dollars that have to be raised for this. Meanwhile, Tesla is still worth as much as the entire European banking sector. So he does have a lot of collateral there. He has a lot of stock that he could sell. Just wondering your take on all of this and how it might fit together.
It's funny. It's just the market is valuing the electric kind of first movers so highly, so richly. We saw also Porsche now worth more than Volkswagen, which spun that out a few weeks ago. So right. You're seeing that market really kind of reward that here. One thing I want to note though, back to the truck stuff, is that there's going to be this $40,000 incentive for purchasers of these trucks, Class 8 electric vehicles. So that's a big deal. You couple that with on the production side, the battery incentives. Incentives are kind of bring down the cost about third. So you can see why this truck stuff is so huge, and companies that are involved with that could be kind of like a play here potentially for people looking to sell HSBC and getting to Nikola or Tesla. We'll see.
Well, hey, with all those rebates or credits or what have you, if December is in fact a delivery date for a bunch of these, well, then they go on this year's books. So it could be in advance, or it could be kind of gaming the accounting. But hey, if they get those trucks out there on the road, I'd be interested to see one as well. We got a minute here. You talked about that Porsche spinoff from Volkswagen. How is that going, and anything else in the EV space that you're looking at here?
Well, it sounds like the Porsche spinoff has gone quite well. The stock was up a lot yesterday. I think today must be down, but it seems like the market is rewarding that. Porsche is going to have some more information on their electric platform. They're making a new platform where they can actually, build a lot of these cars modularly, like on this electric PPE platform. So we're going to see more about that. I think they're kind of set up there for the next transition, and especially in Europe, where we're talking about companies with slow growth and not much hype. Porsche was a huge story for the not only IPO market, but also the European equities market too.
Yeah, I know Porsche was a huge IPO for them, just haven't heard a lot. For that matter, we haven't seen a lot of IPOs in the U.S. this year either. All right, thank you for that report, Praz Subramanian.
Rivian shares sinking today. You can see the stock off just around 7% after voluntarily recalling more than 12,000 vehicles over concerns of a possible steering and suspension hazard. Yahoo Finance's senior autos reporter Praz Subramanian is here with more on this. Praz, looking at the stock reaction, Wall Street obviously very concerned about this recall. What's your take on it?
It's just not a good look right now when they have this critical Q4 coming up. They got to meet these deliveries to hit that goal of 25,000 cars a year. It's a simple issue, right? It's tightening a bolt on an arm in front of the steering knuckle. But if it fails, it's a catastrophic steering failure, right? So they have to do this. Safety is of utmost concern. It's good they're doing this now, but it's just sort of, as one analyst said, it's a black eye for them, right? As like there's credibility issues already on the table for them. And now you have this on top of their big goal in Q4.
I want to ask you about Tesla as well. Some massive numbers out of China breaking a record.
Yeah, on the flip side, huge numbers out of China. The Giga Shanghai, 83,000 vehicles delivered. It's their biggest month ever. This after they sort of did these upgrades to that Shanghai facility over the summer. They shut down for a bit, and now they're really pumping out cars there. Tesla in the latest quarter said that they can produce around 750,000 vehicles per year there now. That's their biggest factory. So huge install base there now in Giga Shanghai.
Now, we just got to couch that. There are new lockdowns already underway in China, not where the Tesla factory is yet, but their caseload tripled after the weekend. So new lockdowns in China could eventually impact Tesla as well. Rochelle?
And Praz, stick around because I want to turn now to Ford and GM. We saw UBS analyst Patrick Hummel downgrading both stocks, citing an expected weakened demand thanks to inflationary pressures, as well as some of these supply constraints we continue to hear about. Now, Hummel predicts, quote, that it will take 3 to 6 months for the auto industry to end up in oversupply.
Well, German car maker Sono Motors is on a mission to make mobility in growing megacities more sustainable. For more on that, the CEO of the EV startup standing by with our very own Praz Subramanian, live from the NASDAQ. Praz.
That's right. If you go over here at the NASDAQ, Sono Motors actually listed on the NASDAQ. They're a German company listed here. They have their Sion solar-powered EV here right behind us. And joining me now is CEO Lauren Hahn. So Lauren, talk to us about the Sion. You're here in the States. What's going on exactly?
Sure. Hi, everyone. Nice to be here. This is the first solar electric vehicle being affordable. We brought it the first time to the US, first hand, first day here. Incredible car, $25,000, family friendly, affordable, solar cells in the whole car body. It's recharging itself, and it's really meant to be that mass market electric vehicle.
So when I mentioned this to people before, they talked to me about a solar-powered car. It's not totally true. You still got to plug it in to get more power. But what kind of solar power, what kind of range are we going to get capture from the sun for most people?
Yes. Giving you an example, beautiful day here in the US, in New York. We have 12 miles per day being commuted in the city on average. This car is recharging at 13 miles a day. It's 70 miles a week on average. That's amazing because that means no recharging for most of the commuters. And that's the big hassle about electric vehicles, right? Recharging, where I can park, where I find a charging station, range anxiety, all that stuff. That's what people are worried about. And this car is solving that issue.
So we know, this car has a total range of around 200 miles per charge.
Right.
But what you're saying is that, given how people use a car normally, you could basically capture as much solar power as you need to use the car on a regular basis. Let's say your commute's around 5 miles each way.
Right.
So what you're saying is, for most people, it makes sense for solar.
Exactly. Commuters. People are using the car to get from A to B to work, right? And they're not driving like 200, 300 miles to work. No, they're driving on average 12 miles, as I said. And this car is researching itself. That's the biggest hurdle about electric vehicles, and we are solving it.
So where are you guys going to be launching? I know you're a German company. What's the rollout plan for this car exactly?
So the first launch is in Europe. We have 42,000 down payments and pre-orders in total from B2B and B2C. And we're right now, figuring out the plan for US. We have great plans for the US. There's huge potential here. We see huge potential for suburban markets here. Family-friendly vehicles, affordable, $25,000.
So taking kind of a step back with this car, $25,000, very affordable. You use a solar power element. Why did you guys decide that was the way to go for EVs? Not just the grid, but capturing from the solar power we get every day.
Well, because I, asked myself, what's a great product? And I'm living in the third floor. I don't have an own house. I don't have an own garage. And I asked myself, where do I charge? Where do I charge my electric vehicle, right? And I came always to the conclusion, it's not working. I need something more than that. And that's why we integrated solar, because we believe it's convenience, it's extending your range, it's highly affordable because you don't have to pay for high electricity bills there, right?
Yeah. And is there more incentives in places like Europe for that sort of thing, or is it sort of across the board? Are you guys getting any kind of incentive?
Well, there are incentives for electric vehicles, I think, across the world. In every country, you get like certain incentives. There are countries starting to incentivize solar electric vehicles. Take Holland. In Holland, there is an incentive for solar electric vehicles. So on top of the electric vehicle incentives, you get a solar electric vehicle incentive. So you see the whole industry is changing to solar electric vehicles. It's, as we believe, the next big thing in electromobility.
So what are we talking about in terms of pre-orders here for the car globally? And also you got some deals in the works with car sharing, right?
Yes, right. As mentioned, 42,000 down payments and pre-orders. It's 22,000 B2B and 20,000 B2C reservations. The B2C reservations being down payment with amazing 2,000 euros on average. So sticky, real reservations. People putting down 2,000 euros for this car on the waiting list. Amazing. And with that, we have the full order book already for Europe, and we're right now going on tour here. New York, Boston, Detroit, San Francisco, and LA, and we'll test the demand there, and we already get great feedback.
You also have this deal with Finn, which I believe is a rental car company or auto insurance company. How does that work exactly?
It's a subscription car company. They ordered just 12,600 cars, and it's an amazing order. We have, so much more potential in the B2B sector. This is the perfect car for being an Uber driver, for being a delivery service, for being subscription car models. We believe there's so much more potential out there.
So real quick, you talk about this, the deal with Finn. Are you guys using Valmet to actually make the cars, construct the cars as a third-party manufacturer?
Yes.
How soon are we going to see these cars on the road?
Our plan is to launch this car and produce this car in the second half of next year. We have a great partnership with Valmet. They're being very experienced over 50 years of building cars. They're currently producing the Daimler GLC and GLA, so they know how to produce cars, and we believe we will not have production hell, as you call it, because we have outsourced the production to someone who actually knows how to produce electric vehicles.
So second half of next year, potentially in Europe, and then maybe in the US, we'll see the tours happening right now across the United States.
Exactly.
Lauren Hahn, thanks so much, Sono Motors. Back over to you, Kiko.
Praz, I know there's a bit of a delay between us, but really quickly, I'm seeing people check out the car behind you. When's Lauren going to let you take a ride?
Yeah, when am I going to get a ride in this car, Lauren? How soon?
Oh, yeah, you can actually tomorrow.
Tomorrow.
Today here is a little difficult, but tomorrow we will have some test rides. So sign up on our website and you can come and grab a ride with this vehicle.
All right, then. Well, thanks, Akiko, for hooking that up.
All you had
so
to do was ask. I know you've driven many of these EVs. I'm going to be curious to get your review on that. Pras, thanks so much for that. Live for us from the NASDAQ market site, and our thanks to Lauren as well.